Welcome back to Invest and Talk podcast.
Good to be here.
Today, we're focusing our analysis on Ramaco Resources. It's a stock that's seen, well, massive momentum and some really serious fundamental shifts lately. The big question we're tackling for you, our listener, is simple. Is Ramaco Resources a good time to buy now?
It's a really timely question.
We're going to break down the fundamental health, the technical momentum, and maybe most importantly, the key catalysts driving this stock. The goal is for you to walk away well-informed.
Sounds good.
And hey, if you enjoy this analysis, please remember to subscribe, like, and comment.
Definitely helps us out.
Also, if there is a specific company you want us to look into next, please leave a comment below. We do read those.
Yeah, absolutely. Now, Ramaco Resources, it's more complex than your average resource stock right now, wouldn't you say?
Definitely. How so?
Well, it operates right at this intersection, between this sort of historically cyclical business of metallurgical coal.
Right, the steel stuff.
Exactly. And then this high-growth, really strategic sector of rare earth elements.
Okay.
And that duality, that mix, is exactly why its current valuation and, frankly, its future are such a fascinating case study right now.
Okay, let's unpack this then. Start with the basics, their roots. Ramaco Resources is primarily known as a pure-play producer of met coal, right?
That's their core identity.
So their fortunes are tied directly to the global steel cycle, infrastructure demand, all that.
Standard resource play in that sense.
Yes. But if we look at the immediate past, that core business has been brutally volatile.
That's putting it mildly.
In 2024, revenue saw a slight dip year over year, down about 3.93% to $666.3 million.
Okay, slight dip.
But the real hit was net earnings, a devastating decline, almost 86% down, just $11.19 million for the whole year.
Wow. Okay, that really highlights the struggle in the traditional coal market, doesn't it?
It absolutely does, and that struggle, it continues right into the very recent past.
Yeah, if you look at the trailing 12 months, the TTM, just the last 4 quarters added up,
right.
Net income is actually negative right now.
Yeah.
Minus $19.89 million.
Ouch.
Yeah. Plus, their latest quarterly EPS, earnings per share, missed the consensus estimates by 7 cents.
So, on paper, the recent financials, they paint a pretty clear picture of a company facing some stiff cyclical headwinds.
Definitely. Not a pretty picture if you only look backwards.
Okay, that context makes this next bit genuinely surprising. What's fascinating here is the complete, radical shift in analyst sentiment despite those poor recent numbers.
Right. It's a head-scratcher at first glance.
The general street consensus right now has moved decisively to strong buy. That's a massive disconnect. Why the sudden bullishness when the TTM losses are so apparent?
It's purely a forward-looking bet. Simple as that.
Okay.
The market is basically ignoring the rearview mirror here.
Yeah.
Analysts are forecasting a powerful recovery. They're projecting a positive fiscal year 2025 EPS of 5 cents.
5 cents. Okay, so back in the black.
Back in the black. And this expectation, it isn't based on some kind of coal miracle happening.
Right.
It's really about those cyclical headwinds stabilizing, combined with the promise of growth and, crucially, diversification into that new strategic sector we mentioned.
The rare earths.
Exactly. They are betting on the company successfully navigating this turn, which is why we've seen all those target price revisions moving higher.
Okay, that makes sense. If they're losing money on a TTM basis, but analysts are still comfortable, the balance sheet must be pretty solid.
It has to be, yeah.
Let's move past those TTM losses then and focus on the fundamental health, because that's where the resilience has to lie, right?
It does. And their balance sheet is surprisingly healthy, which is a massive comfort in such a volatile sector.
Oh, so?
Well, for instance, their financial leverage is quite moderate. You look at their debt-to-equity ratio, the DE ratio, it was just 0.36 as of July 31st, 2025.
Okay, let me just clarify that for our listener. When we talk about a DE ratio, we're looking at how much debt a company uses versus what the shareholders actually own.
Correct.
So a ratio of 0.36 for a cyclical mining company, that means they're using very little debt to finance their operations.
Yeah, extremely conservative for the industry.
That suggests serious financial caution, flexibility.
Precisely. And their liquidity looks strong, too. They've got a current ratio of 1.36
Okay.
and a quick ratio of 0.84. Basically, this just means they have plenty of assets to cover their immediate short-term obligations.
Gives them breathing room.
Exactly. Gives them the runway they need to fund their growth while they wait for that commodity cycle to hopefully turn back up.
And despite the earnings volatility we talked about earlier, Ramaco has actually managed to keep paying a dividend. zeros and 55 cents per share, yielding about 1.17%.
Yeah, that's a key signal.
That doesn't happen unless management feels pretty confident in their cash flow discipline, right? And their ability to keep rewarding shareholders, which, again, just reinforces the strength of that balance sheet.
Absolutely. It speaks volumes. And if we connect this financial strength to the bigger picture, it's really supported by Ramaco's competitive position in their core business, too.
Okay.
They have significant high-quality reserves in really strategic regions like Elk Creek and Burwind.
Right, good locations.
Which translates directly into low-cost mining operations and some major logistical advantages. That large acreage position gives them scalable growth potential and, crucially, production resilience across those commodity cycles.
But as we kind of hinted at earlier, the game-changing advantage, the real competitive moat here, it isn't just about having low-cost coal anymore, is it?
No, not at all. It's the strategic pivot.
Right.
Absolutely. The diversification story is, I think, the primary driver of the stock's current momentum. We really have to talk about the expansion pipeline and that critical move into rare earth minerals.
Tell us more about that.
So Ramaco has retained Hatch, a well-known engineering firm, for a pre-feasibility study on its Brookmine rare earth elements project.
Okay, the Brookmine project.
Yeah. And this isn't just some, side venture experiment. This diversification capability could potentially support production resilience completely outside of that volatile met coal cycle. It offers a totally different valuation metric for the company.
And the analysts are really hanging their bullish hats on this pivot, aren't they?
They really are. We've seen multiple upgrades. Northland bumped them up to strong buy.
Okay.
We've seen raised price targets from B. Riley, from Jefferies. They're all reinforcing this idea that Ramaco is shifting, from being just another commodity producer to becoming potentially a strategic domestic resource leader.
Okay, this is where it gets really interesting for me. The technical momentum. Because the money, it has just been pouring into this stock.
Sure, it is pretty incredible, yeah.
As of October 10, 2025, the price is sitting around $47.20. The move has been, well, astronomical, considering the stock has recently set new 52-week highs, and its 3-month range started way down at $15.18.
It's a textbook powerful uptrend, no question.
Okay.
The stock is trading solidly above its 50-day simple moving average.
Which is where?
Down near $28.08. And it's miles above its 200-day SMA, which is way back at $15.18.
Wow.
That separation, that gap between the moving averages, confirms this isn't just a short-term blip. It's an established, powerful trend that institutional money has clearly been chasing.
Okay, so for tactical investors, people looking at shorter time frames, we need to watch the key levels. Resistance seems pretty clear at that psychological $50 mark. Right?
Yeah, $50 is the big round number everyone's
Yes.
watching. Breaking that cleanly will probably require some serious volume.
And on the downside, support.
That zone between roughly $36.50 and $40, that area was heavy resistance earlier in the year.
Right, I remember that.
So it should now act as a pretty solid floor for any near-term pullbacks, theoretically.
Okay, but we do have to pause here and address the technical warning sign, don't we? The RSI.
Yes, absolutely. The 14-day Relative Strength Index, or RSI, it's high. It's sitting at 77.54.
Which is deep into overbought territory.
Traditionally, yes. That usually suggests a stock is due for a pullback, maybe a consolidation.
So, should traders be worried? Is it about to top out?
Not necessarily immediately, and this is the crucial nuance you often see with these high-momentum stocks.
Okay.
When a stock stays overbought for this long, and it keeps breaking out to new highs anyway, it often suggests really robust institutional support, persistent accumulation.
Meaning the big money keeps buying.
Exactly. It means the market fundamentally believes the price should be higher, and it's strong enough to override that traditional pullback signal, at least for now. The underlying momentum is just that strong.
And that aggressive technical action, it's really justified by the catalysts we've seen recently.
Entirely justified. The biggest driver just happened in October 2025, and it's purely geopolitical.
Okay, tell us about this rare earth pivot catalyst. What exactly happened?
It was huge for the stock. Shares spiked nearly 12% almost immediately after China announced tightened controls on its rare earth exports.
Oh, okay. Trade policy.
Right. This single event instantly increased the strategic value of Ramaco Resources' domestic rare earth assets. Specifically, that Brookmine project we mentioned.
So it went from being a potential future value driver to something much more immediate.
Exactly. Suddenly, their diversification project wasn't just about hedging against coal prices. It became viewed as a potential national security asset, directly linked to global trade policy and supply chain security.
That's a fascinating pivot point. They also needed money to capitalize on this opportunity, I assume.
Correct. And smartly, back in August 2025, they announced a $150 million public offering of Class A common stock.
Okay, selling shares.
Yeah, they were capitalizing on that early bullish sentiment to raise non-debt capital, specifically aimed at funding the growth initiatives tied to that Brookmine project. Good timing on their part.
Makes sense. Looking ahead then, over the next, say, 3 months, what are the pivotal catalysts investors should absolutely have marked on their calendars?
Okay, the first one, and perhaps the most important near term, is the Q3 2025 earnings release. That's expected around November 3rd, 2025.
And what are people watching for there, beyond the usual coal numbers?
Well, investors won't just be looking at coal volume and cost management, though that's still important. They will be laser focused on any updates regarding the Brookmine feasibility study.
Ah, the progress report on the rare earths.
Exactly. Any positive news on that front could fundamentally change the trajectory again and really reset expectations for 2026 earnings and beyond.
Got it. What else?
The second set of catalysts involves institutional repositioning. You've got the 13F deadline on November 28, 2025.
Right, when the big funds disclose their holdings.
Yeah, that's when large institutional investors, those managing over $100 million, have to disclose what they owned at the end of the quarter. So it gives us a look at which big funds are buying in or maybe selling out.
Useful intel.
And following that, you have potential ETF rebalancing around December 15th, 2025. Depending on which indices Ramaco might be added to or its weighting changed in, that can influence liquidity and price as those funds automatically buy or sell shares to match their index mandates.
Okay, so earnings update, institutional buying, potential index changes. What about the rumor mill? What's the speculative buzz running through the market?
Oh, the rumor mill is running nonstop, and it's tied directly back to that geopolitical importance of the Brookmine rare earth project.
Makes sense.
There's constant chatter, speculation regarding potential acquisition bids or maybe joint venture overtures from large industrial companies or even defense players who desperately need a secure domestic supply chain for critical materials, especially after that China news.
Interesting. Okay, so putting this all together, what does this all mean for you, the listener, if you're considering an investment right now? We absolutely need to provide a balanced view here and talk about the risks.
Absolutely. The risks are definitely still present, and they are significant. We can't ignore them.
Like what?
First, Ramaco is still, today, heavily tied to metallurgical coal. That hasn't changed overnight. So, commodity price volatility is inherent. It's dictated by global steel demand, which creates uncertainty. That's exactly what hammered their earnings last year, remember?
Right, that 86% drop. And regardless of the commodity they're digging up, there are always just basic operational risks in the mining industry itself.
That's right. You always have the potential for mining disruptions, accidents, issues with ensuring stringent environmental and regulatory compliance, managing labor concerns. These are ongoing operational hurdles that can impact margins and production targets pretty much without warning.
Okay, fair points. But putting all these pieces together, the poor recent earnings, the resilient balance sheet, that geopolitical catalyst, the technical strength, the overall thesis we're deriving from the sources reviewed, seems pretty compelling, right?
It does, yes.
So what's the final score, the rating?
Based on the analysis, the overall sentiment points towards a bullish rating.
Yeah.
Let's call it an 8.5 out of 10.
8.5 on 0, bullish. Okay, and the rationale?
The rationale is pretty sound, I think. The current bullish outlook is really driven by that strategic diversification into rare earths, which is a huge potential value unlock. That's combined with the financial cushion provided by their strong balance sheet, which gives them staying power. And then you have the clear near-term upside signaled by that really robust technical momentum and all the analyst upgrades we've seen.
So for you, the potential investor, is this viewed more as a quick trade opportunity or something for the long haul, a strategic hold?
The analysis suggests it's actually attractive for both.
Oh, interesting.
Yeah. It seems suitable for tactical trading, maybe playing the volatility around upcoming events like those November Q3 earnings or potential contract announcements related to Brookmine.
Okay.
But it also looks like an excellent potential strategic long-term exposure. If you want to play the eventual metallurgical coal and steel recovery cycles, but also specifically capitalize on that value unlock coming from the rare earth diversification. It fits that bill too.
That is a thorough and really eye-opening analysis of the current landscape for Ramaco Resources. We've covered the messy recent financials, the surprisingly strong balance sheet, and that kind of geopolitical windfall with the rare
It's a
earths.
complex picture right now.
It really is. So to leave you, our listener, with a final thought that sort of builds on this analysis, Ramaco Resources' fate going forward may increasingly hinge less on traditional coal pricing in the long run and far more on global policy decisions. Those policy shifts coming out of Beijing regarding rare earth exports and the resulting pressure on the U.S. and its allies to secure domestic critical materials. That could amplify the volatility, sure, but also the opportunity for shareholders far more dramatically than any traditional coal metric ever could.
Yeah, the story here isn't just a resource stock anymore, is it? It's really becoming a national supply chain play.
Exactly. Well put. Thank you for joining us for this analysis. We hope this look helps guide your thinking.
My pleasure.
Until next time.